Hello again, ladies and gentlemen, and welcome back to the Petroleum Economist 2020 LNG to Power Forum for Asia Pacific. Our first two sessions this morning explored the role of decarbonisation in the energy mix of the various regions in Asia Pacific, with underlining the point that it's not a monolithic block. It consists of separate regions which will develop in different ways. But one thing that we can say for the region as a whole is that it will be the epicenter of LNG demand growth over the coming decade or two, perhaps even 3 to 2050. So to look at demand growth in the world's biggest LNG markets, we have a great panel. Our moderator for this session will be Marc Howson, Managing Director for LNG Market Development at GLX, and I'm going to leave him to introduce his panelists. Marc, over to you.
Thanks very much, Alex, and thanks for inviting me to moderate today. We're very excited. We've got three excellent panelists today. We've got, in order, Cezanne Ko, who's the president of China Gas Marketing, based in China itself. We're also very pleased to have Kenneth Fu with us. Kenneth is the managing editor for Asia LNG for S&P Global Platts. And we also have Ryan Pereira. Ryan is the global director for gas and LNG located in London for GaffneyCline. And I should have said earlier, Cezanne Ko is with ExxonMobil, where she is the president of China Gas Marketing. In terms of the format for the panel today, we're going to start with a 3-minute introduction from each of our three panelists. And to help them facilitate that, they will have one slide which will be displayed on screen as they're giving their thoughts on the topic of the day, obviously demand growth in the world's biggest LNG markets. Each of them has a particular specialism and particular insights that they'll be focusing on for those 3 minutes. After that, I will pose some pertinent questions to each of the panelists, and we'll engage in a discussion around that. That'll probably be 20 minutes approximately. And then please, to all audience members, if you can submit your questions directly online through the platform using the chat function. We do have time later on and indeed throughout the questions to pluck various questions from the audience and pose those to our panelists for discussions as well. So with that, I'm going to hand over to Cezanne, who will give us her views on demand growth in the world's biggest LNG market. Cezanne, over to you.
Hey, thank you, Marc, and good morning, good afternoon, good evening, wherever you are. And I'll just say that, I came back to China end of August, and it's been amazing. Things are almost back to normal. I flew from Beijing to Shanghai early this week, Shanghai to Guangzhou yesterday, and it's all packed, right? So let me just look at the slide that you have in front of you. This is ExxonMobil energy outlook. It's amazing to see, how China has recovered from the global pandemic. And if you look at our projection of gas demand, almost in all sectors, right, it will increase. And then on the supply side, which is on the right-hand side, you would see that natural gas, as compared to 2017, China natural gas demand almost tripled, right? And if we look at the pipeline imports as well as the LNG imports, we expect that by 2040, it will be about 50% of that. Now, some of the major trends that we see this year in 2020, many of us have heard President Xi announcement in the UN Assembly that, he hoped before 2030, carbon emission to peak by 2030 for China, and by 2060 to have carbon neutrality. And we all know that coal today, in the energy mix in China is about 58%. For the power electricity is about 66%. And we believe that although there has been a lot of advocacy about clean coal, we believe that for China to achieve this ambition, which will not just benefit China, but the whole of this world, clean coal or coal for that matter, have to be contained. So natural gas itself, whether as a main fuel, will play a very important role, or as a key friend of renewables will play a key role. Then let me talk about it as a main fuel. As a main fuel, it's clean, it's reliable, it's in abundance. And you see that, China over the years, the diversification in terms of import into China came from many different parts of the world. So reliable energy security, LNG will continue to play a key role. Then we talk about it being a good friend of the renewables, a good partner of renewables, because we all know that renewables are variable. However, in partnership with natural gas, it will basically help the energy system in China to maintain the stability. So we believe that with that sector, LNG will continue to play a very key role from now till many years to come in China itself. Thank you, Marc.
Thanks very much for your opening remarks, Cezanne. Kenneth, I'd be interested to hear your views on this as well.
Thank you, Marc, and thank you, Cezanne, for the illuminating insights on China. I'd just like to take a step back to look at the broader LNG market itself, as well as how the market in general is developing in its process of commoditization. So the way LNG is bought and sold these days is changing very fast. The traditional way of doing business based on destination restricted, very inflexible term contracts are disappearing, and it's making room for even more enhanced interconnectivity, promoting a much more liquid, competitive, as well as transparent marketplace. Now, I think that one of the key opportunities here is for the LNG industry is on pricing. And LNG is one of the rare markets that we know of that is a liquid traded commodity by itself, whose many long-term contracts are still based off another liquidly traded commodity, which is oil. And because of that, it has been pretty difficult for the market to balance supply and demand based off its actual pricing fundamentals. Now, and just to outline the importance of a market price, we do believe that it is important for an LNG to be priced off a LNG benchmark that reflects LNG fundamentals, minimum noise from other markets, as well as being neutral to buyers and sellers. As you can see on the left-hand side chart, with the correlation between LNG and oil pricing increasingly broken, we do see gradual acceptance for the market to shift towards LNG pricing or market-based pricing in their longer-term contract. Now, Platts has a long history in price benchmarks across a broad section of markets, including crude oil and iron ore, which follow a type of progressive journey in terms of benchmark development. And these are bulk commodity markets which have similar structures as LNG and face the same challenges as well, such as large cargo size, relatively limited liquidity, and high costs. But these bulk commodity markets have developed transparent benchmarks over the years, and we are seeing the LNG market do the same due to a new wave of flexible supply hitting the market. And JKM is one of the very good examples there. We think that greater liquidity and flexibility is helping increasingly as well to unleash some of the market's inherent flexibility. It is inherent because a spot seaborne LNG cargo that can move to any importing nation is more flexible than a pipeline whose destinations are fixed. So LNG pricing can therefore actually have a significant impact on pipeline pricing. And this is seen in oil markets where seaborne benchmark prices are used as the basis of pipeline flows in a lot of geographies. And this is also reflected in how LNG market is developing its trading hubs in general. This includes the rapidly developing spot trading hub of JKTC, or Japan, Korea, Taiwan, and China, that is accounting for about 60% of global demand right now. And this hub is not an intersection of physical pipelines or a pipeline network like certain regional natural gas hubs. It's more akin to oil trading hubs where delivery can be made or taken at multiple ports or terminals. As such, we're also seeing other LNG trading hubs like that of Middle East India or MEI, as well as the trading hubs of Northwest Europe and the Mediterranean. Now, Singapore by itself could develop into a regional trading hub for Southeast Asia, more of a manpower trading hub, as we have already seen in trading setups being kind of created and implemented over the past couple of years. Back to you, Marc.
Thanks for the insightful remarks, Kenneth, and we certainly look to explore them more in the Q&A session afterwards. Ryan, it would be good to hear your views on the topic as well.
Hey, thanks very much, Marc, and good morning to all of you from London. So it's a pleasure to be invited to participate in this event in Asia in a really key market. And in a second, you'll see popping up quite a busy slide, for which I make no apologies, because actually, as you look at it, in many ways, it reflects the chaos in today's LNG market. And as we were discussing amongst the panel, I was reflecting on the panel content. For me, much of what 2020 has subjected us all to, the phrase that really rung out in my head was that the darkest hour is often just before the dawn. This really came to mind. And this analogy is as true of gas today as it was 20 plus years ago at the time of the Kyoto Protocol, when many were actually ringing the death bells for fossil fuels. And today, if you look at it, fossil fuels remain at exactly the same percentage on the electricity generation mix. But of course, the actual demand has increased by over 50% since 1998. So I'm confident that despite the progress made by renewables, gas has a fundamental and growing role to play in Asia's energy mix. But of course, recently gas has been tarred with the same dirty brush as many other carbon-intensive fossil fuels. However, the chart on the bottom left of your screen shows that gas has a far lower carbon intensity. So whilst this in itself does not give gas a license to be the fuel of choice, it has to earn this right through ensuring continued control and reduction of emissions along the entire gas value chain, all the way to the end consumer of gas or power, which is what we're discussing at today's event. And of course, this will also entail suitable deployment of technology and innovation, such as carbon capture, utilization and storage, CCUS, and hydrogen applications. So as mentioned in some of the morning's panels, I am actually yet to see convincing evidence that renewables can provide a critical, massive source of stable, reliable, and I'd say constant energy to feed the world's energy demand. So step up gas. Not only that, but actually accounting for the fully loaded costs, required storage and backup costs of flexible gas via generation, for example, renewables are still not wholly competitive on a global basis. Therefore, I've coined the phrase, that we find ourselves in a race to decarbonisation, not just a race to renewables. Gas and LNG for power is going to play, for me, an essential role in the energy mix here in Asia Pac for at least the next 20, if not 30 to 40 years, or even longer if blue hydrogen actually takes off. That said, as mentioned by Kenneth, the past couple of years have been extremely challenging for the gas industry. Prices have halved during 2019 and then halved again by mid-2020, driven by both a supply glut as well as COVID-exacerbated demand weakness, before, of course, showing recent signs of recovery into this winter, as the chart just showed. This, of course, has drastically hurt the profitability of sellers, who in many instances have not been able to cover their marginal cost of production, let alone their full loaded fixed costs. And our team here at GaffneyCline have been looking at this, some analysis during the summer. And what it showed was that some US LNG cargoes were actually sold at an $8 million per cargo loss. So if you scale that up, this equates to some $500 million per month for the US LNG industry alone. So existing projects are hurting and new FIDs have been delayed, 2020 could actually see 0 FIDs, which is in stark contrast to what we saw in 2019. On the flip side, however, as we're here to discuss today, such low prices, as you can see, even dropping below $3 earlier this year, have created an actual added incentive for Asian gas buyers. Despite this, there remains short-term demand uncertainty, but as Suzanne said, I view this very much as a 6 to 12 month blip, whereafter I believe we'll return to robust demand growth in rates in Asia, with many economies already showing signs for post-COVID, V-shaped recovery. So what does this growth look like, as the two charts on the bottom right-hand side of your screen show? Well, today we know that Asia-Pac accounts for some 60-70% of global LNG demand. And whilst we expect that share of global demand to remain constant, we foresee the volume of LNG required into Asia increasing by around 200 million tonnes per annum between now and 2040. So put that into context, that is a tripling of currently in place Qatari capacity just to feed Asia. So in closing, as we have heard, China will of course be a major demand centre, but the demand growth in Asia-Pac overall is driven really by the South and Southeast Asia. And key players that you'll hear from today will include India, Bangladesh, Pakistan, Thailand, Vietnam, Philippines, Malaysia, and Indonesia. And if you look on a sector basis, I'd say they'd include heavy industry, such as steel, cement, and mining, as well as transportation. Demographic drivers, the changes, urbanization and industrialization, are all factors that will really fuel this growth. But a substantial feature will be increased electrification, which will predominantly come from fuel substitution, as we've heard, of gas for heavy fuel oil, diesel, and importantly, coal. This power, most importantly, will need to be affordable to consumers, but reliable. And by reliable, I mean constant and instant. So whilst there will be challenges and obstacles, if the rest of the world can provide the gas feed, Asia definitely has the appetite.
Thanks, Ryan. Very, very insightful. And I guess I'd like to start the first question on some of those themes you touched on there. And in particular, given, like you say, the kind of policy drive to clean up the energy mix, particularly in Asia, and the relatively reduced cost of using renewables, what role do you specifically see LNG being able to best play to help Asia manage some of their environmental concerns?
Yeah, so I think, Mark, that's an interesting question to start off with. And, you know, as is often the case, as we've seen in the Western world, fantastic economic development and population growth has also been accompanied by increased air pollution, carbon emissions, and potential climate change impacts. So it's disturbing to read, for me at least, that in some countries in Asia, more than 90% of the people are subject to air quality that present a significant risk to good health. Huge and staggering. For me, LNG imports have a huge role to play in helping Asia's environmental and air quality concerns and addressing those. And as I mentioned in my opening comments, gas has a substantially lower carbon intensity than other fossil fuels. But in addition, as we heard from an earlier panel, there are benefits from lower NOx and SOx emissions. However, I think we have to be realistic and look at our starting point. We've already heard today that electricity generated by coal is, of course, number 1 or 2 ranked in the vast majority of Asia-Pac countries. The figure in India is around 3/4, and in China approaches 2/3, as Cezanne mentioned. But having said this, perhaps if you think about it, Asia could look to the example of the USA, where the shale gas revolution and the availability of low-cost gas has lowered coal-fired generation share from some 50% in 2005 to around about 25% today, so a halving, quite phenomenal change. So along with an increased role for renewables, this has resulted in substantial emissions reductions through this introduction of gas. For me, as we look to Asia, it's also interesting to note that gas has already made inroads into many countries. For example, it ranks already as number 1 or 2 fuel generation in Japan, South Korea, Thailand, and I think Indonesia as well. So there are numerous other examples and opportunities, and later on today, we'll hear about the huge and tremendous growth in another great example, which is Vietnam. So it'll be really good to hear about that panel discussion. But let me look to the future now. We've already heard a lot this year about emerging consciousness surrounding the carbon intensity about imported gas and of course LNG. So carbon neutral cargoes are getting more exposure over time, but I still think, for me anyway, there's a lot to be understood regarding exactly how they will be certified, offset, and actually that carbon intensity will be reduced. But the positive news is that Singapore and other emerging hubs, as Kenneth mentioned, are actually playing a leading role here. And just let me step out further into the future. I think our industry, has a duty, and we'll need to embrace carbon management technologies really that we're looking at our company, and also policies being looked at by a number of governments in order to reach some of these net zero goals that we've already heard so much about today, and that we'll be hearing more about from China and Japan in the coming weeks. So in that respect, looking far into the future, blue hydrogen could create further opportunities for gas penetration in Asia.
Understood. Cezanne, I wonder if you would like to share your views on particularly China, given your role, and obviously you're based on the ground in China, how you see gas helping that country meet its cleaner energy requirements.
Maybe I start by sharing a personal story. 5 years ago, when my family flew in from US to Beijing, and before we even arrived, the plane was just, reaching the airport, you can already start to smell the smoke. And I would say that the last year, since I relocated to Beijing, I see blue sky majority of the time. And I would say that LNG play a key role in bringing blue sky. And to me, everybody on earth, whether you're rich, you're poor, deserve to have the right air quality. And LNG can play a key role on that. As we all know, China, as it is already the largest energy consumer. And if we look at the LNG import into China this year to date September, despite the COVID-19, it increased 10%. 10% increase. And that basically just showed that, Chinese government is very determined to basically give their citizens a better life. Their blue sky policy is definitely working. And I mentioned just now about President Xi's vision. And I would say that carbon neutrality will definitely continue to help, China to grow in that aspect. And we foresee that by 2030, right, the import of LNG into China will probably exceed 90 MTA, right? 50% growth from 2019. And again, energy mix of natural gas in China right now is only about slightly over 8%. And the global average is about 24%. So in terms of the growth, is tremendous. So I agree with you, Ryan. I think there's tons of opportunity in China because of the Chinese government vision of giving better life to their citizens.
Interesting, Cezanne. And I do understand that the Chinese government has been making moves like deregulating parts of the value chain, particularly regarding infrastructure. Do you see that as very important in China, that the role of government policy and regulation in supporting the country's LNG stroke gas demand growth?
Yes. So the formation of Pipe China last year and the transition of all the assets completion in end of September from the three national oil company into Pipe China, I would say, is a key step. And along all the whole value chain of natural gas, you see many different inefficiency. And our thinking is that as Pipe China, under the vision of the Chinese government to have this reform, liberalize the market, will take up and remove lots of the inefficiency. And this inefficiency should lower the overall cost to the end, right? And by lowering the consumer cost, I would say gas demand will then go up. So I definitely is the right step forward. And recently, beside completing the transition of these assets, not just on the national trunk lines, you see that the next step is basically the provincial grid. And Guangdong government was the first to conclude, transferring the provincial grid into pipe China as well. Now, every province has its complexity because, they are run differently from province to provinces. There will be some complexity, but I do not doubt the determination that with all this, the Chinese government will be able to make the system much more robust. And then what role does ExxonMobil play in this area? We operate in many different parts of the world. We have been sharing with Pipe China, the policy makers, about what are some of the best practices in the US, in the Europe, right? There's no one size fits all. We believe that China will adopt the best practices in each part of the world and define its own system that work for China. But one of the things that we have been recommending to the Chinese government is that, hey, instead of using volumetric billings, they can transit into heating value, right, aligned with the international world, so that you take out the inefficiency that the buyers only prefer lean cargo. With that, then you open up the market to make it again more efficient. So market reform is key in my mind to basically continue to support the growth of LNG and natural gas penetration into China so that they can have better air quality.
Thanks, and certainly well noted. Just slightly changing focus for a second, I want to hear from Kenneth. I know S&P Global Platts looks at a lot of commodities, and I know Kenneth has as well in his career. I was just wondering, maybe compared to those other commodities, how commoditized do you think Asia LNG is at the moment, Kenneth, and maybe what still needs to happen to increase that commoditization?
Thanks, Mark. I think LNG definitely has come a long way over the last couple of years. What we have seen is that a lot of pricing and non-pricing factors have been much more standardized, while it is still a step behind other very kind of mature markets like oil, crude oil refined products, as well as some markets in pipeline gas in the US or Europe. There definitely has been a rapid sort of commoditization that has happened. What we are seeing is, of course, a change in terms of the flexibility involved in the general trade and as well as in commercial contracts. Within commercial contracts itself, we are seeing a lot more flexibility in terms of volume, duration, and opportunity to divert cargoes to different locations. So while destination flexibility restrictions has been quite a big obstacle in the past, gradually that is becoming less of a problem. And it's also especially important because it would allow a lot of these end buyers in Asia, which could be over-contracted over the next few years, like, for example, Japan, to resell these cargoes or to take opportunities when they come in trading such cargoes. What we are also seeing is that because of that expanding shipping fleet globally, both in the Atlantic and in Pacific, the gas markets globally have become much more interconnected. So you are talking about how European gas markets, as well as Asian LNG markets, have become much more in sync, both in terms of pricing and in terms of trade optimization. When you have portfolio majors like ExxonMobil, Shell, and BP trading cargoes, you are not just looking at Asia in general, but you are also seeking opportunities to sort of optimize portfolios, divert shipments into other demand areas like Europe itself. And the last key factor as well is on standardization of trading terms. I think LNG in general, because it's still a very young market compared to the other more mature bulk commodities like coal, like oil, some of these contractual sort of practices like MSPAs seem to be a barrier of entry for new entrants. But we are seeing some of these standardized quite rapidly, and you wouldn't put it past the industry to come up with a much more standardized template for MSPAs, much like the GTs and Cs sort of trading templates that we have seen in the oil markets that have really lowered the barriers of entry and made a trading of LNG much more flexible.
Absolutely, and I guess and I think that all makes perfect sense. I guess we've spoken about the physical side of the business. Do you also see there to be an important role for LNG derivatives in Asia? And can you update us on how that's progressing?
Yeah, so we do see a rapid growth in LNG derivatives, and that's also partly tied to how LNG pricing or an LNG benchmark like JKM is increasingly finding its way into physical long-term contracts. So when you have more physical long-term contracts, there is increasing a need to actually engage in risk management strategies in hedging those volumes. So while we do see that the pandemic perhaps has put a bit of a slowdown in terms of derivatives trading and financial trading globally in many markets, right? Because sometimes working from home kind of reduces the pace at which you can actually trade on the financial market, and there are some compliance practices as well that sort of slows down that trading. But by and large, we have seen JKM LNG derivatives actually rose about 60% year on year. So in the first 9 months of the year, it's already hit about 115 million tons or so. That's already surpassed the whole of last year. So we do see a trend where end users, trading houses are becoming a lot more particular about risk management and the fact that they have to have a sort of a clear risk mitigation strategy when it comes to trading LNG.
Well noted. Thanks, Kenneth. Just going back to the physical side of the business, Ryan, we've seen some slightly newer, less conventional types of LNG demand gain traction, particularly in Europe. I'm thinking small-scale LNG, LNG bunkering, etc. What do you see as Asia's potential for adoption of these less conventional uses of LNG?
Yeah, thanks, Mark. I mean, that question really, I guess, shifts us to another gear, really. And I think it really ties with a lot of what Kenneth was just talking about. So it really supports, my thoughts in this area. So if you think about if we had hosted this conference maybe 5 years ago today, there'd be very little talk, if any, about these opportunities in small-scale LNG globally, let alone in Asia. Yet today, we continue to hear about adoption of these new concepts and technologies daily, pretty much, So Kenneth, you mentioned about continuing commoditisation and standardisation. I think that's key of the LNG industry. And for me, that's really nicely tees up the thoughts on this question, because that's really been the enabler of growth of these LNG subsectors, if you want. But maybe if you take a step back and you think about small-scale LNG and just reflect on what that actually is. People think about it in a very narrow concept sometimes, but actually it's applied in a wide range of fields, from power generation, which we're discussing a lot of today, residential, industrial demand. So we'll see a lot of that in China and other parts of the world, in remote areas in particular. And of course, as a land and a marine transportation fuel. When we're thinking about it at our team here at GaffneyCline, we've often coined like 3 phrases actually, and funny enough, they all seem to rhyme. So that seems to be able to easily to remember. So they all rhyme with Asian, funny enough. So the first, I think, enabler or the first trend really is marinization. I'd say trend number 2 is modularization, and trend number 3 is transportation. So I did promise you that they all rhyme. So let me talk you through maybe each of those in turn, and let's start with number 1, marinization really. So I'm referring here predominantly to the huge increase in FSRU and FLNG solutions. And here in Asia, of course, Malaysia really led the way with PFLNG Satu. But it's actually scary to think that was already 3 years ago since that actually came into operation. But on the FSRU front, what we're seeing in the global projects that we're working on, anywhere from Australia to the other ends of the world, really here in Asia and in the Middle East, opens up many more opportunities. And it's almost actually easier when I'm thinking about Asia to list perhaps the small number of countries that aren't thinking of developing FSRU projects. And of course, Singapore, where the event's being virtually hosted today, has evolved into one such expertise for vessel conversions and also new builds as well. So secondly, the theme of modularization. Here, I think Asia has an absolutely huge role to play, not just in receiving it, but also in the construction of modular plants for deployment in other parts of the world. For example, in Russia, in Yamal, and the USA, to several Gulf Coast projects there. So in the near term, I think smaller LNG trains will be better able to serve really similar pockets of disaggregated demand. For example, in Indonesia or the Philippines and countries with archipelagos as various disaggregated source of demand. And thirdly, transportation really. From a marine perspective, and it links to FSRUs, I think that will continue to rise in terms of LNG bunkering. And we see really good recent examples here from Singapore and Japan very recently this week, carrying out its first ship-to-ship transfer there, and real increased activity. But I think a huge growth opportunity really lies in Cézanne's chart, which he flashed up at the start, in vehicles and road transportation, not just in China, but which of course China has led the way in many ways there. But the key to success for each of these solutions, whichever of these three trends that you look at, has to be, for me, fitness for purpose. And that means it has to be the right size and at the right price, because otherwise it just won't work. So there needs to be enough economic rent in that value chain. So Marc, I know we've been discussing this quite a lot recently, and not just around this webinar, but it actually led me to think about, just as I was waking up this morning, the fourth theme really, which actually rhymes again. And that for me is digitalization. So again, another rhyme. And it's not really my area of expertise, but I know that in your area of the business, something that you look at daily, and the increased use of digitalization. So I was actually going to throw it back to you if I could, as a moderator, just to say, based on your experience, what do you see as the role of digitalization in enabling increased LNG demand and growth in Asia?
Thanks a lot.
Sorry to throw one back to you there.
No, real absolute pleasure. And thanks for highlighting that. Of course, GLX is a trade management platform, and we do support digitalization primarily in LNG, but for other commodities. And we've certainly seen increased usage. We've now got over 76 GLX subscribers on board. We also have over 40 shareholders. You probably saw the fairly recent high-profile one of Shell coming on board a few months ago. And in terms of how most of our subscribers see benefit from GLX, it's really around the productivity. So it gives their market participants, whether that be the traders or the people issuing the tenders or the bilateral trades, just increased avenues to reach out to the marketplace, to negotiate with counterparties in the market, and then ultimately transact in the market as well. Another important element is the ability for internal transparency. So whether that's managing the company's own LNG portfolio, valuing the positions on a daily basis, or taking care of the scheduling of the physical cargoes, or running scenarios around the inventories regarding that, it very much gives that internal transparency to stakeholders within the organization, which is obviously very important from a compliance perspective as well. So all information and activity on a platform such as ours is timestamped by user, which can obviously be used either for audits or analytical purposes. So I guess that's where we are in terms of digitalization. I think the panelists so far, including Ryan a second ago, gave a very good outlook on the medium and longer term views for Asia LNG. I'd be interested in this coming winter. There are a lot of expectations around that, and obviously the role of China is very key. Cézanne, I was wondering how China is currently managing their gas and LNG inventory levels and activities generally to avoid a potential shortfall this summer.
So, many of us know that in 2017, China during the winter time had pretty, acute shortage. And obviously lots of lessons learned here. And in 2020, you can see that the Chinese government has not set any firm targets on type of fuel to consume. Now, while coal to gas transition are still included in some of the provincials' agenda for Guangdong, but there is a very important emphasis on switching based on resource availability, and that's a very key component. And we saw that the three national oil companies have already started filling their underground storages earlier this year, taking full advantage of their lower spot LNG cargoes in the international market. I mentioned just now about the 10% growth, despite, the first quarter being negative, but China continued to grow in GDP. But in terms of the LNG import, it far exceeds the GDP growth. So therefore, they have significant amount of storage being done. The other thing worth to note is that two gas trading platforms in China, in Chongqing as well as in Shanghai, are facilitating the winter months peak shavings cargo trading ahead of the peak session. So I believe that they are well prepared.
Reassuring to know, and thanks for those kind of on the ground insights, Cezanne. Just one very last point from Kenneth to summarize. Kenneth, I'd be interested to hear what your outlook is. Obviously, I know you speak to a lot of the market participants on a daily basis regarding Asian LNG for this coming winter as well.
Yeah, thanks, Mark. And that's a great question. And I think Zhisan already touched on China's extremely important role in determining what LNG prices would be this coming winter. And one of the factors I think that a lot of people point to is policymakers mandating over 7 million Chinese homes to actually do coal to gas switching in earnest. If that management of this policy isn't as strong as it should be, as we saw in a couple of years ago, then there could be some kind of demand impact. But looking at other factors, I think most people would have seen that LNG prices in the last 2 months have really risen significantly from around $2 about a couple of months ago to over $6 at the moment. And that's related to really increased winter buying activity from Asia, as well as a lot of supply disruptions in Atlantic projects in US, in Norway, in Nigeria, as well as some production uncertainties in Australia, for example, in Gorgon. So production-wise, I think that is a very big factor, whether projects are going to run and operate as they should, as per normal. And in a very tight market like the winter market, any supply disruption, whether it's Atlantic or Pacific projects, could actually tilt the balance a lot. I guess another factor as well is whether Europe could actually maintain its sort of demand. And we are also seeing, I think, a forecast of a colder winter in some parts of Europe, even within Northeast Asia itself. So I think that's another factor to look out for, whether we are going to see a colder than expected winter, and that could impact the propensity to actually continue importing LNG at potentially even higher than higher price levels than what we see for oil in contracts.
Well noted. Well, unfortunately, we've run out of time, but I just want to thank each of you so much. We focused on a lot of areas. We focused on China. We focused on the rest of the Asia. We've looked at Asia in a global context. The other thing we've looked at, of course, is the physical side of the business, the financial side with the derivatives contract, and we've also looked at different timescales. We've looked longer term at some of the emerging demand centers, and we've also focused a lot on the next 6 months in terms of the upcoming winter. So thank you so much for the excellent discussion, Cezanne, Kenneth, Ryan, and thank you so much for the organizers, particularly Alex and Rachel, for organizing this session. Bye for now.
You're most welcome. Take care, everybody.